Well, he is. He's tweeted about it, and he sort of feels that he's competing against everyone else that's trying to weaken their currency. But we're all in the weakened currency hall of fame here. I mean, the Fed had 3 rounds of QE, 7 years of zero interest rates. I mean, we're all a bunch of hypocrites when it comes to who's not manipulating their currency and who is, and how they're going to do it, whether they verbally do it, whether they do it through their central bank, where they physically intervene.
You agree with that, Steve? Don't mean to interrupt you.
I am.
What are you doing over there?
I'm looking at the dollar to see if it's moving. I think that the news that Kayla Tausche just reported can't be underscored. There was a meeting in the White House in which a senior White House advisor made a presentation to the president about different methods for weakening the dollar. Let's not be numbed by all that's happened the last 2 years and lose the incredible nature of that. The idea of capital controls being presented at a cabinet meeting to the president of the United States.
But is it striking to you because it's not a strong dollar point of view, or is it striking to you because of the intervention that's being considered at all?
It's striking to me for 2 reasons. One is that it's allowed to be presented at all at the cabinet meeting, that it's actively under consideration. The second thing is the president has shown that he acts on a whim. And if the idea that this idea is in front of him, just very much like an article was presented to him about Stephen Moore, and he decided to appoint Stephen Moore to the Federal Reserve before the vetting process, that this confirms the discussion that's been out there on Wall Street. There have been a bunch of papers out there.
Was the one who apparently decided against this
today.
Didn't want to hear it
today. Kind of but that presentation that Kayla just reported, that it even happened at all, is striking news.
Peter?
I agree. Let's put this in perspective. The dollar index, which is euro heavy, and the dollar trade weighted index is no higher than it was in 2015. Secondly, we are a consumer dependent economy. OK, purchasing power is very important to a consumer-dependent economy. So to think that by weakening the dollar, that somehow is going to generate faster economic growth, I think is nonsensical.
I just want to say one more thing. For the better part of 20 or 30 years, we've had a strong dollar policy that has served the country reasonably well. There are probably as many companies that do well with a strong dollar as do well with a weak dollar. And we have not really targeted the currency as a fiscal matter. Whether or not it's been a monetary policy matter, different story.
And one last point. We rely on foreign investment. We have budget deficits. We have trade deficits.
The idea that we'll play with the dollar.
We need that money to come here. If you start weakening the dollar, that money does not come here. And you will see higher U.S. interest rates as a result.
Quincy, let's fast forward into next week. And I assume you're in the camp that says the market has already discounted an interest rate cut.
Well, yeah, I mean, the market clearly has.
Yeah. And then there are earnings. Have they discounted all the news on earnings?
They're beginning to, because remember, we came into the earnings season, but this was going to be the beginning of the earnings recession, which was supposed to be last earnings season. And we've had some very good surprises to the upside, not just because the barrier was brought down so low, but because they were actually some very good earnings and good guidance and actually some top-line revenue growth.
What are you figuring in for the dollar when you have to sort out which of these companies, think about the industrials where it maybe has been a headwind. Think about what the Fed, it's not even clear to me if they ease, is that supposed to make the dollar weaker or stronger at this point?
It's very interesting because if Chairman Powell were to surprise the market with a 50 basis point cut, let's just say he and his cohorts win. They shut out the Rosengren. They shut out the, Esther George. They just go ahead 50 basis points and things are awful. The dollar will weaken. But the point is in markets, open markets, as long as we have better economic data coming in, the market brings the dollar back up.
Right.
So you, in essence, what you're hoping for, the president would like to have, and it would be great for the president to have a weaker dollar and a much stronger economy. They don't work.
The only way you can get that is if the rest of the world, Steve, correct me if I'm wrong, starts to do better. In other words, people always want the dollar when everything else looks bad by comparison.
Right. Let me tell you two things that we know. One is that the rules are different for the world's reserve currency. And 2 is we don't know what the rules are. Okay? There has been a lot of research, and Alan Greenspan put it best. There is no factor that you can think of to predict the value of a currency that does a better job than the flip of a coin. We just had a roundtable discussion with Charlie Evans from Chicago Fed. He says the research shows we can't really manipulate the currency if we wanted to. If you're a small country and you have a big budget deficit and you reduce that budget deficit, you can raise your currency. We are America.
US, yeah.
We're the reserve currency. We could try to not give dollars to people. People could still want those dollars and could lower their prices in order to get them. It's not something we necessarily control.
Look at the experience of the Swiss.
Yeah.
Swiss National Bank, negative 75 basis point deposit rate, benchmark rate. And
trying to weaken the currency.
Trying to weaken the currency. They've been doing it for years, and the Swiss franc continues to weaken. On the flip side, then you have Sweden that's had negative interest rates, and their currency is weak. But in terms of driving economic growth, the euro's gone from 140 to 110, and how's European growth doing?
Not any better.
How's the German economy doing?
Worse.
That is very dependent on exports.
And Peter, and right now, I mean, Germany was the country that initially, as everything started, under no conditions are you going to do anything to weaken this currency. And then we remember Draghi, because guess what? This is an anniversary of the whatever it takes. And then you had the anniversary of the negative interest rates. But by that time, Germany was grateful for it, as they are now. The IFO report and what the head of IFO actually said tells you that Germany now is very happy to bring down that euro against other countries.
Their economy is so weak.